So finally, we will again, last and final repetition we will make for it, because this is one of the most crucial adjustments and the movements also you need to understand. Finally, I'll give a clarity to you. The acquisition has happened. See, April 1st, retained earning opening balance is a negative balance, 4,000 loss. Fine. Just a second. Just a second. So this is the opening retained earnings balance. Okay. Then October 1st, the Strata company was acquired by Paradigm. Okay. And on that day, they reported a loss of 2,000 they are showing. So pre-acquisition retained earnings total balance is nothing but pre-acquisition retained earnings balance is opening retained earnings plus post-acquisition profits. 6,000. But this is negative balance. But one thing you need to understand. After this is from like the profit here, the losses are from April to September. Okay. From September till March, the period is post acquisition profits. But the total profit given for the year, total profit given for the year is 8,000. That is pre-acquisition profit plus post-acquisition profit. Pre-acquisition loss is 2,000. Post-acquisition, let's say X we are taking. Total profit is this. X is equal to 8,000 plus 2,000. The post-acquisition profit is 10,000. So we got all the things here very clearly. Post-acquisition profit. And at acquisition, you have 6,000 total losses. I've already shown you here. Till October, there is a loss. Okay. The total balances when you add up. Now, the closing retained earnings balance will be what? Say opening retained earnings balance plus pre-acquisition profit. The retained earnings on acquisition is minus 6,000. Post-acquisition profit you have earned is 10,000. So what is the retained earnings on reporting date or closing retained earnings balance? 4,000. That's what it is showing here. Okay, done. So this adjustment completely explained to you the total things and movements also. Or else you can take up in this way, minus 6,000, and it has the closing balance. From minus 6,000, if we remove 10,000, we get the 4,000. That's understood fact, and everything is very clear. This is the most easiest ways to understand. Okay. Now we were discussing about the fair value depreciation. See, when we speak about fair value adjustment, we clearly know that there is an adjustment given in the question where they said that the plant has decreased by 3 million. So there's an impairment loss. Okay. Now you tell me, this is the closing balances, okay, at the reporting date when the reports are prepared. Fair value, see, like this particular depreciation, see, if 3,000, the value has decreased. So what is the depreciation for that? So the effect of depreciation we should understand. If asset value is increased for consolidation purposes, depreciation expense should also increase. Okay. So extra depreciation, we already know about the extra depreciation point. Now here what has happened, the impairment loss, we are seeing an impairment loss here. exception of an item which had a fair value of 3 million below its carrying amount, the plant had a remaining useful life of 3 years, they are saying. And 3 years is how much? Like 3 years is 36 months. And on the date of acquisition, they conducted a fair value exercise. So 3,000, the value has fallen into 6 months out of the total 36 months of 3 years. Now 500. See, if there is a loss, impairment loss, the depreciation will increase or decrease. Please tell me yes or no. I want an answer from all of you. If there is an impairment loss, the value is decreasing, the depreciation will increase or decrease. Hello.
The depreciation will be positive, no, sir?
Yes, it will decrease, right?
Yes, sir.
No, that's what. So 500. See, if your asset value is increasing, your depreciation will increase. If your asset value is decreasing, the depreciation will decrease. So here we have taken 500 and so yeah, equity investment, we already know 7,500 is Paradigm's investment, 3,200 is Strata's investment. Okay. So now what is the value of the equity investment? We have to check. The financial asset equity instruments of Paradigm and Strata are carried at their fair values. Fair value 7.1 and 3.9. So can we compare that? Okay, I'll just take it here. Seven point one, 3.9. Okay, can you just compare those values and tell me the difference? 7,503. So 7,500 to how much it has become? 7.1. So the financial asset April 1st and 31st March, they had their fair value 7.1 and 3.9. $7.5 and 3,200. So 7.5 minus 7.1 and 3,200 and 3.1. So that is how much? Minus
3.9, sir.
3.9.
Yes, sir.
So this is like, 3.9. So I think Strata's, there is a gain in case of Strata, right? How much is the gain in case of Strata? From 3,200, it has
Sir.
gone to 3,900, 700, correct? Yes.
Yes, sir.
Yeah. So there is a gain on equity instrument from 3,200 till 3,900. 700 is the gain. Fine. So that also we have taken. And now when we take on acquisition, this is the balance. Reporting date, this is the balance. Post acquisition, this is the balance. Post acquisition retained earnings matter. That we will divide amongst the parent and the NCI. Okay. We will move forward. So fair value adjustment has been done. Fair value of net assets on the date of acquisition is 11,000. What we have done? We have already taken. See, this is the consideration transferred. This is the NCI. We add. and then whatever the net assets acquired represented by equity. What comes under equity? We have taken the share capital, we have taken the retained earnings, we have done the fair value adjustment. So all this adjusted, we got what? We got net assets acquired represented by equity, 11,000. So this is the goodwill on the date. This is the goodwill on the date of acquisition. Okay. So what we have done? Consideration transferred in totality 12,000 plus 1,500, 13,500. NCI value 6,000 minus net assets acquired represented by equity 11,000. Okay. So this we have already calculated. Share capital, retained earnings, which was negative balance and fair value adjustment, fall in the asset value. So in total, 8,500 is goodwill. This we will be taking in the balance sheet. Fine. This is done. NCI, 6,000 is the NCI's fair value. 11,200 is the post-acquisition profit. Of that, 25% goes to NCI, 2,800. So NCI value is there. Now, group retained earnings, Paradigm's retained earnings, 17,200. 17, just a second. Retained earnings of Paradigm at the beginning and at the end. Because we only take the equity of Paradigm. And Paradigm will also get their share of profit from Strata. So 11,200 post-acquisition earnings into 75%. Gone. And see, we know that who has sold the inventory, and we need to remove the unrealized profit balance. Fine. Loss in equity investments will adjust first. Loss in equity investment 7,500 they had invested. Now it has become 7,100, it seems. There's a loss of 400 that we will adjust. We have taken. Yeah, see, they have issued loan notes, right? 1,500 and 10% is the interest they need to pay for 6 months for this current year, 75. Okay. And this only if this adjustment we finish, we are almost done and we'll do the consolidation part. Each month, just a second. Since acquisition, Paradigm sales to startup were consistently 4.6 million. Paradigm had marked this up by 15% on cost. So this is the selling price, and 4,600 100 plus 15 represents 115. $4,600. So 4,600. We will see the cost price and we'll see the unrealized profit. So 4,600 is the selling price. 4,000 is the cost. 600 unrealized profit. On consolidation, this has to be removed. So we will adjust this. And yeah, because this is the parent selling to subsidiary. So just a second. Paradigm selling to subsidiaries. So from Paradigm's retained earnings, we will remove the unrealized profit. So we removed it. 600. I have done the calculation also in front of you. So removed. Okay. Because they have to show the inventory at cost. And this same 600 will adjust from inventory balance and show it at 4,000. Give me a second. So this total balance 33,925. I think all the adjustments are done. NCI value, every value we've got. Now we will do the balance sheet. So non-current assets, property, plant and equipment, 47,400, 25,500. Fair value, you need to adjust the value of the asset because it has fallen by 3,000. Impairment loss and 500. Since the value has fallen, it will reduce your depreciation. If the value increases, it will increase your depreciation. So value has fallen, it will reduce the depreciation. So plus 500. You have to see what happens. With revaluation gain, the depreciation increases and it decreases. What happens if the asset has become from 1,000 to 1,500? Your depreciation, the difference amount is 500 and 10% if I take. So depreciation will increase by 50. That will reduce our profits and reduce our assets also. Now, but our asset has decreased. It has become 500. So let's say 500 into 10%. So depreciation will decrease by 50. Okay. Depreciation will decrease by this much and our profits will also increase by this much. So it will reduce our, this depreciation balance will decrease and it will increase our asset value. Okay. Less depreciation, more asset value. So we decrease the decrease in depreciation we added. Goodwill, we have already calculated. Financial asset equity investments. Already you know that 7,100 and 3,100 is given. Inventory, I told you we need to adjust the inventory value. This is the total inventory and then 600 unrealized profit. Receivables, no adjustment. Bank, no adjustment. So 1,44,000. Equity attributable to owners, equity shares, 40,000 will take the parent's equity and 6,000 we have just calculated. The NCI value. But NCI value will just NCI value is 8,400, right? 8,800. Okay, fine. We know that there was some like thing given here. Actually, one share value is how much? One share value is $1. But the shares have been issued at a premium of, market value of Paradigm shares is $2. Fine. So market value of shares issued of 12 million. This is given. %75% just on the calculation. Okay, this is the market value, 12 million. Actually, it should cost how much to us? Market value of shares issued 12 million would be recorded at 6 million share capital and another 6 million share premium. Okay, because of the nominal value. So share premium is a part of equity. Fine, I'll just show this. See, in actuality, this is the 12 million, right? So this is the total value, $12 million. So $12 million, what we have got at the rate of $2 per one share. So 12 million, if we divide $2, $12 million. So let's say, so this many shares will be there. Now, this many shares, actual nominal value into one is, let's say, And the premium value is, let's say it's 12 million, right? Not 1.2. 12 million is nothing but one more zero we need to increase. So we have three zeros omitted. Okay. So this is what? So this particular 12,000 what they are showing is as per the $2, which I can bifurcate into 6,000 with normal value, nominal value, 6,000 with premium value. Okay. That's what they're showing. So premium. Share premium. And but again they are showing share premium once again. What is this? Okay, fine. So that 12, whatever we did, right? 12,000. In that 12,000, 6,000 is the normal equity. 6,000 is the share premium. Normal equity is taken with equity shares, and share premium is share premium. Okay, that's all. So Paradigm acquired some shares of Strata by means of share exchange of two shares. We have given two shares to them for every 5 shares. We have given loan note to them, and Paradigm has not recorded any of the purchase consideration, although it does have 10% loan notes. Market value of Paradigm shares was $2. So whatever they have acquired, they need to record it, correct? So that's what. There was a share exchange. For every 5 shares, Paradigm has given 2 shares. So extra 2 shares they need to record now in their books. The value of the entire capital, what the entire amount of the capital, what Paradigm has to show now is around 12,000, 3 zeros omitted. Okay. But in that, there is a nominal value we need to show with equity, and premium we need to show with premium as a separate thing. Okay, but it's a part of equity. So we are bifurcating this. So the shares, whatever the Paradigm has issued, the value of that entire is 12,000. Out of that, 6,000 with nominal value and 6,000 with premium. Okay, because it's a share exchange. They have given shares for the shares, whatever they have acquired. Retained earnings calculated, NCI calculated. The total amount is this. Loan notes already you know, extra 1,500. And trade payables, given in the question, 75 outstanding interest for 6 months, which we again calculated here. Fine. Bank OD also given the question, the total current liabilities is this. If you do the totaling, it's 1,44,000. This is the end of the Paradigm question, a very important, crucial question. And if anyone has got any doubts, can ask me. So this is the end. Fine. We will, take up some other question in another class. As of now, we are done with the session. Okay. Thank you. If time permits in the evening, I can take up. I will try to take one more question from P&L. Okay. Thank you.
Thank you, sir.
Thank you, all of you.